It is not easy. How many accounts have you blown with prop firms?
Countless. I lost tens of thousands to make 100,000. Central bank decisions, that's really where the money is made, because that is when you see these really big moves in the market. Once you're profitable, but you don't have a lot of money yourself, prop firms can really elevate, kickstart your trading journey, because you suddenly have big capital to trade with, which you otherwise wouldn't have. If you have proper risk management and you will try to keep those funded accounts, because the goal should be to never lose a funded account, then of course you're going to make that back and you're going to make more.
What do beginner traders need to understand in order to be able to pass prop firm challenges? Hey everyone, welcome back to another interview. Today I'm here with one of the top TTP traders of this year. His name is Rutger, and in the past few months he's done over $10,000 in payouts with the trading pit. Today he's going to tell a little bit more about himself, the way that he trades, and how eventually you can scale your prop capital and make a switch from trading with prop firms to trading with personal capital. Now, Rutger, thanks so much for being here. Can you maybe introduce yourself to everybody? Who are you? Where are you from? And how do you trade?
Yeah, of course. So I'm Rutger. I'm 25 years old and I'm from the Netherlands. And I started trading in 2020, where Corona sparked my interest to learn something new. And I ended up finding out about trading. And I was like, okay, I'm just going to do this as long as needed to become profitable. And I think it took me 3.5 years to become profitable. Of course, I had to try a lot first and struggle and fail before I eventually found something that worked. And now 5 years in the game, doing consistent payouts and also scaling my private account effectively. So
fantastic. So 5 years into the game, a real veteran that we're speaking to here with. Now, what's the strategy, man? Tell us, what's the secret sauce that makes you achieve those consistent payouts with the trading pit?
Yeah, so I started out just trading technicals, a lot on the lower time frame as well. And what you see is that you get inconsistent results. Of course, the lower time frame can work, but there's also a lot of noise in the lower time frame. So I ended up having like big losing streaks, and this weighed pretty heavy mentally. So I didn't really overcome these losing streaks. And that's why I decided to switch to the higher time frame. But once you switch to the higher time frame and you go away from like the intraday volatility and more to the overall direction of the markets, you find out that there is also more fundamentals involved, such as interest rate differentials, and just how economies work, macroeconomics, which I also learned about during my studies. This is why I also find it really interesting to read and think about fundamentals and where the overall market is heading, what's being priced in, what's not being priced in. So you can kind of have like an overall bias for the markets and therefore trade like bigger moves. And this is what I've been doing for the past 1.5 years. And really combining that technical with fundamental analysis to get like a high probability trading idea and to express your view of the market through placing a trade.
Finally, somebody who doesn't just trade on the 5-minute time frame and says, okay, here's the supply zone, here's the liquidity, boom, 1 to 3 TP hit. Fantastic. Now, I want to make it as clear for everybody who is watching today how you actually come to a trade idea from nothing. So we're going to explain to everybody watching today how you trade with the prop firm, so how you trade with the trading pit. And we're going to start by looking at the two sides of your strategy. So like you said, you should trade on one side the fundamentals and one side the technicals. First, let's dive into the technicals. How do you start learning about the technicals? What is, in your opinion, the right way? Or is there even a right way how to trade technicals? And how should somebody who's watching this understand how to go about it and to, let's say, create a strategy or find a strategy that works for him and to then, or will enable him or her to achieve those consistent prop firm payouts?
Of course. So because I trade higher time frame, of course, I start on the higher time frame. I try to look for overall market structure. I don't try to make it too complicated. Look for market structure. Are we bullish? Are we bearish? Then look for pullbacks in the market or the overall order flow, where if the momentum is going to continue or not. And then if I have an overall direction and this aligns with my fundamental bias, which I'll touch on later, Then I go to the 4-hour time frame, and there I look for a few confluences like supply and demand, liquidity, highs and lows, and then for a fractal reversal in the market where just the candles show a actual reversal inside the market. It's kind of an aggressive form of structure, but you just apply this with the rest of your confluences to really see that the market is shifting in the area you want to see it shift.
Okay, but you're making it sound very easy and going through it very fast. Let's bring the pace a little bit down. Like you said, okay, I look at the higher time frame and I look at the direction. Like what for you is the higher time frame and how do you then look at the direction? So you said market structure, but let's take it really from the beginning. Okay, so you start on the weekly or do you start on the daily? What's the higher time frame for you?
Yeah, monthly, weekly time frame.
Okay, so monthly or
overall
weekly
direction.
Okay, and then what do you look at for the overall direction? You look at the market structure. Do you look at liquidity
structure, or supply and demand, the overall order flow? Especially in trading markets, you can have like bullish after bullish candle on the weekly or monthly time frame. So if you see that there's really bullish momentum, then I'm not looking for shorts.
Okay, and then you go from the higher time frame down to the entry time frame, the 4 hour.
Daily / 4 hour.
Okay.
And like I explained, I look for certain confluences like supply and demand, liquidity lows, and a reversal inside the market.
Okay, so you start with looking for supply and demand, and then you wait for price to come into your demand zone?
I wait for price to get in my point of interest with, for example, liquidity low getting taken out. And then, looking for that reversal with fractal structure.
Okay, and fractal structure is what exactly?
It's based on the price pattern, just purely based on candles where there's an actual reversal happening with the candles.
So market structure based on individual candlesticks?
Yeah, exactly.
Okay, exactly. And then that's how you finally come to the decision to actually then enter a trade. So it's relatively simple in a way, right? So just supply and demand, market structure, liquidity, and then you just wait for entry confirmation when price comes into your area of demand.
Yeah, exactly. But I don't try to overcomplicate it. Like I also am like a little bit dynamic sometimes when the fundamental confluence is really strong. I can also just market order on a liquidity low.
Okay.
So it really depends on like how convinced I am of my own bias and what the technical or the price action shows me.
And then what pairs do you trade at this on?
I trade multi-asset, so I trade all Forex pairs because I look at all individual currencies' fundamental strength / weaknesses, and then I try to really identify where the highest probability play is based on, for example, the strongest currency, which in my opinion is, for example, the Australian dollar right now, because the Reserve Bank of Australia is hawkish. China just introduced a stimulation package, and because Australia is the most important trade partner of Australia, therefore the Australian economy also gets a boost. And then also just the general risk on sentiment because the tariffs are over, Trump isn't yapping as much. And there are just more trade deals. So.
Okay, so a good overview there already of the fundamentals.
Exactly.
Again, flying through it. Let's try and build a framework here for everybody watching. Like, how do we build a fundamental framework in order to form a fundamental bias when trading the Forex markets?
Yeah, so you do research and you want to look at the relevant sources. I personally read Bloomberg. I read the currency center of Reuters, and then I also look at bank reports. For example, ING has a really good website, promoting their long-term views on the FX market. Touching on Fed policy and other central banks and what they're likely to do next. And with this information, you can make a thesis or you can make like a few themes for a certain trading idea, and then you want to trade or express that idea through placing a trade on the research you made, and then just looking at a few technical indicators or through a few technical confluences to express that trade and actually trade that idea.
Okay.
And making profits, of course.
Of course, that's the best part. But then within, let's say, that overall research, because I understand where you start, what are then those key points that you look at? Because, for example, if I look at the dollar, like there's so many different articles. Then Trump is getting there's for example, Trump makes comments on the Fed, on Powell, but then on the other side you have Powell saying, I'm not going to leave. So there's, let's say, them two clashing their heads against each other. But then on the other side, you also have just let's say, policy remarks, but then you have also stuff being talked about, okay, what is inflation doing? But then you also have building permits numbers coming out, or job openings, NFP. Where do you start in this ocean of information that there is about fundamentals? Do you have a framework where you just start with, okay, for example, the most important thing that I look at from a fundamental perspective is interest rates. And then from interest rates, okay, what is it, for example, based on? Well, it's based on inflation. It's based on, or let's say the interest rate decision is based on, okay, what is inflation currently doing? How is the job market currently doing? So is there a way that you kind of like try to mechanicalize that research, or is it just really kind of like more feeling based, and somebody just has to see how these news events have affected the markets for, let's say, a period of a year to finally start understanding how to actually trade fundamentals? Or would you say it's a lot more accessible than that? There's really a kind of sort of framework that you can use to analyze fundamentals.
So there's this website called foxfundamentals.com, and it's just it's a model where all drivers of the economy are taken into account for a certain currency, like interest rates, PMIs, money supply, the unemployment, you name it. And all those drivers of the economies are scored, and then you get a certain score for a currency. And with this score, you can see like, okay, this currency is bullish and this currency is bearish, and therefore you already have like an idea, okay, based on the fundamental drivers or the drivers of the economy, you already have like a bias. And then also if you read the news and if you read what's happening, and then because these data models is based on what is already out there, so this is already priced in, but then the real moves come from things that aren't priced in. For example, upcoming Wednesday, we have the interest rate decision from the Fed, but the market is already pricing in a 25 base point cut. But like last year, where they suddenly came with a 50 base point cut, if that's not priced in and they release that number, then you see the crazy move. So anticipating on this kind of policy decisions or central bank decisions can really, that's really where the sauce
money is made.
Where the money is made, because that is when you see these really big moves in the markets. Because when the number is released, that is the moment where these numbers are being priced in by the markets.
Okay, so if I understand correctly, maybe for everybody watching as well, so the easiest way to actually then do a fundamental analysis and use that in your trading is go to Bloomberg, Reuters, Forex Factory, or foxfundamentals.com. Note down the biggest headlines that there are for that specific week. So for example, in a week where there are interest rate decisions, or in a week where there is NFP, look at, okay, what is being forecasted that week? What is being said in the news? And then just work out those scenarios where there is a deviation of that specific news event. And that is where you are going to be able to make money. Because indeed, if the interest rate decision is there and it comes in exactly as expected, you'll maybe see spike up, spike down. All those scalpers, they get stopped out. But then the market is eventually just going to continue based on where it was already heading. But if you see that deviation, that is where you're going to see that massive spike within price. And that is where the real money is then going to be made, correctly? So that's kind of like maybe like a mini guide that we're giving here already to do fundamental analysis. 100%. And then based on the strategy, the technical strategy that you then explained, that is then how you're going to be entering the markets, right? Fantastic.
Yeah.
Okay.
That's just for the perfect timing.
Masterclass given here together with Rutger. Fantastic. Now, Rutger, what we now want to move in, because we understand how to do the technicals, we understand how to do the fundamentals, but now I want to hear, how do you then actually make money with a prop firm? Because it is not easy. How many accounts have you blown with prop firms?
Countless.
Yeah. How many dollars do you think you've blown up trying to pass prop firm challenges?
Yeah, tens of thousands. But I lost tens of thousands to make 100,000.
Yeah, okay.
That's part of the game.
Yeah, it's like a business, right? Like a return on investment, you invest and then you get an X ROI back on the investment. Now, what is it that you find crucial? What do people need to understand, or what do beginner traders need to understand in order to be able to pass prop firm challenges?
Yeah, so I think there is a framework. Of course, you can approach prop firm trading countless of times or countless of ways, I should say. But you have to have an edge in the market. And that's why I think it's important to start with like a small account, just trade a bit, show yourself, or it can be a demo account as well. Because if you're demo trading and you're not profitable, you can spend like on a 10K, a 100K, or even a 200K challenge. But if you're not profitable, you're going to blow it or go and draw down either way, right? But once you're profitable, but you have you don't have a lot of money yourself, like prop firms can really elevate or kickstart your trading journey because you suddenly have big capital to trade with, which you otherwise wouldn't have. And then once you start passing those challenges by using proper risk management, doing multiple challenges, not just one, you have a higher pass rate percentage. And if you do that, for example, on 5 or 10 challenges, and you pass, for example, 4, that's still 4 passed funded accounts, right? So if you do that, for example, with 100K accounts, your investment might be 3 or 4 or 5K. But if you then have 400K of funded accounts and you make a few percent per month, then it's going to make the money back plus more.
Yeah.
Because if you have proper risk management, then you will try to keep those funded accounts because the goal should be to never lose a funded account. Then of course you're going to make that back and you're going to make more. And once you're in this state, then what you can do is diversify with your prop firm payouts, where you also, if you get, let's say, get a 4K payout, you put 2K on your private account, 1K into new challenges, and 1K, for example, cash to pay out yourself a bit, or just keep cash for something else. And then you just keep scaling. But you also start stacking up your private account.
Yeah, so. Good information there. Now let's dive a little bit deeper into that, although you went pretty deep. What I now want to do is I want to talk about the individual concepts of what you were kind of like touching on, because I think it can be even more clear because you were already sharing a little bit of the source. Like, let's start, first of all, passing a challenge. What kind of risk should a trader use in order to pass a challenge? And what kind of challenge should he buy?
Yeah, so I personally love the one-phase challenges of the trading pit. I think they have like the best trading conditions for a one phase in the game. I won't mention the name, but I tried another one phase at another prop firm, and suddenly after I requested the payout, they said there is trailing drawdown, which doesn't reset. So the max drawdown was only 6%. I requested a 2.5% payout, and now the max drawdown of the account is 3.5%, which is really, really tight. So I have to risk really small now, and this is just this doesn't work. But with the trading pit, they have static drawdowns, 7% a drawdown for a 10% profit target. And for example, with FTMO, they don't offer a one phase, and the two phase challenges have a 10% target as well, right? So I think if you're a skilled trader, you have proper risk management where you use like 1.5 to 2% risk per trade. You trade multiple challenges at the same time, where you kind of like relate trades. Yeah. Then the chance that you pass one is pretty big. Yeah. And if you then apply proper risk management to the funded account, where you never lose the funded account, you can already start printing one of the first accounts you trade. Well said. So passing the prop firm challenge, you get the one phase with the trading pit, and then you risk, let's say, 2% on a challenge account. Max. With a 1 to 2, maybe a 1 to 3 risk to reward. Exactly. And then, we pass the challenge, we go into the live trading environment. What is then the goal with that live trading account? Because obviously you have those leaderboards where you see people doing 10, maybe 20. I've even seen on those leaderboards like 40 or 50% in a month. Which in my opinion, like obviously you can do it in a month, but like long term, it's not going to be realistic. I always say, guys, if you make more than 50% for, let's say, 3 months in a row, you're going to have Warren Buffett calling you, sending you a private jet to pick you up and bring you to the United States, because he's going to want you to make money for him. So yeah, exactly. Talk about the realistic side of trading with live capital, and or let's with an actual live funded account. What is the goal there, and what is the risk that you apply there? Yeah, so I had a mentor recently, which was a hedge fund trader, and he taught me, he was also really big in the prop firm space. Like this guy got banned with multiple firms because he was actually trading that well. And he said the goal should be, like I already mentioned, to never lose a funded account. Because he asked me, like, what is the longest you've ever traded a funded account? And I was like, maybe a couple of months, but then after all you blow it. But he was like, okay, now make the mindset switch where you lower the risk to where you basically can never, with an X amount of losing streak, just add like 5 extra losses to that and then trade that risk. And you really should never lose your funded account if you stick to your plan. And this will eventually result in consistent prop firm payouts, right?
Yeah.
And if you trade an account, for example, for 2 years or 3 years, where you do like, or if it's even like 1 or 2% per month, then man, like the return you make on a 100 or 200K funded account is crazy.
So what's the actual profit target then that you have for a live funded account?
Like it doesn't really matter because like with the trading pit, you can request a payout every 2 weeks. So you just see what's the balance after 2 weeks. You don't try to force a payout where if you are in drawdown and it's like 1 day away from the profit request day, that you really try to push it because this will eventually lead to you not following or sticking to your plan and going even deeper drawdowns.
Yeah.
And I've also made the mistake before where you start risking more to make back the drawdown to make like a profit target or like the payout request day, and of course then it's not going in your favor, and you end up blowing an account which really wasn't necessary. So just sticking to that low risk, seeing like the long term, and the goal should be like, okay, I will trade this funded account for at least a year.
Okay, and what would you give as the number one piece of advice to somebody who just passed the prop firm challenge and has a live funded account for the very first time?
Just start low risk, like 0.5% risk, because let's say you have like a 7% max drawdown, that's 14 losses. If it's like a 10% drawdown, that's 20 losses in a row before you blow up, right? And even if you then like really enthusiastic and you really want that first payout and you try to force it a bit, and let's say you take 5 losses or 6 losses in a row, you're only at 3% drawdown.
Yeah.
And this is really recoverable even with a 0.5% risk.
Yeah.
Like let's say you trade 1 to 3, that's 2 winners and you have it back, right? You don't have to force anything. But then people start like, okay, now I'm going to 1% risk or 1.5%, and then like you throw 1-2 times and then you're suddenly in really deep drawdowns, and that's where like the negative spiral happens for most traders who end up blowing an account.
Well said, man. Well said. And what is the number one thing that you love about trading with the Trading Pit?
Just the whole company, the vision. We met Illimar the other day.
Who's the founder of the Trading
founder
Pit.
of the Trading Pit, really awesome. And just the long-term vision they have. The customer support is like I've never seen with any other prop firm. And just the trading conditions are amazing. They now integrated their own broker. So like there's an incentive for them to provide the best spreads, the best executions. And I just really like their vision. So
a fantastic conversation. And I think a very well-structured interview that helps you understand how to really combine technicals together with fundamentals and then actually apply these concepts with the proper risk management that Rutger explained here on both the challenge phase and then the live capital, with some good psychological nuggets in between there as well. So thanks for watching this podcast. If you guys want to have any future questions of yourself featured here on the podcast, let us know in the comment section down below what you want to or what you would like to hear. Don't forget to leave a like and subscribe to the channel. And then I want to thank Rutger and I want to thank you guys for watching, and have an amazing day. Thanks.